Welcome everybody then to further additions, and remember when we're talking about further additions we're going from, let's say, 60% to 80%, that's supposed to be an error, 60% to 80%, and the idea is that you've already have control. It's not that you are buying 80% straight away, you already have control. So what do we do when we already have control? So this is the idea, the general concept is this, that you buy, and in this case you buy the extra 20%, you buy the extra from the NCI, because if you think about it, NCI would have gone, using this example, NCI would have gone from 40% to 20%. Yeah, because we own 60 and 80. So you're buying the extra 20% from the NCI. So therefore, NCI in your working will go down. You have to buy it from them and it will go down. And you will pay for it. So any difference between how much NCI goes down and the amount paid, the amount you paid for the extra 20%, doesn't go to income statement, but goes to reserves. Okay, that's the general idea. Now I want to go on to say, right, okay, well, how do we do this? What's the process? What process do I need to think about in the exam? Okay, so the process is this. Number one, you have to calculate NCI at the date of the further addition, which is normally the year end. Okay, and I'll show you how to do that in a second. Once you've calculated that, we then need to calculate the fall in the NCI. How much has it fallen by? Trickier than you might think. Then thirdly, as we've just said, we compare the fall to the amount paid. That will give us a difference, and that difference goes to reserves, never to the income statement. Okay, so that's the process. Now what I want to do is I want to kind of show you, well, how. How is this done? How do I calculate NCI? Nice and straightforward then. So this first bit, you would say, right, what was NCI at acquisition as normal? You would add on post-acquisition up until the date of the further addition as normal. Sometimes take off with impairment, sometimes not. Read the question, okay? Now, let's say that this is, for example, 40% NCI, and this is, for example, comes to 100. So we've worked out, step one, we've worked out NCI is 100 at the date of acquisition. Now I'm going to go from 40% down to 20%, because I am making a further acquisition of 60 to 80, okay? So, how am I going to calculate this fall? Well, NCI at 40% equals 100, agreed? That's in our little example. And now I want to know, well, how much it's going to fall to 20%. So therefore, what I've got to do, I've got to work out what NCI would be at the new 20%. And now you can see, hopefully, it's obvious, it's a half. You simply take the 100 and you times it by the 20 over the 40. So it would be 50, which means you would need a reduction as well of 50. Okay, so it would need to fall by 50 to get down to 50. Now finally, so the fall in NCI was 50. Let's say that we paid 60 in order to buy this. Therefore, this loss of 10 goes to reserves. Okay? Now, One other thing. We said NCI, we said it was at acquisition, whatever that was, plus post acquisition, whatever that was, minus any impairment of goodwill, if it's fair value. Then you put here minus a transfer on further addition because NCI is going to fall. So you would just reduce it in our question by 50, and that would be the figure there on your SFP at the end. Okay, best to do it looking at some examples, which we go and do next.